Hello traders, this is Michael Huddleston with the Pro Traders Club. Entry for February 13th, 2011. Okay, my voice isn't quite there yet, but it's good enough to talk. So, real quick, on the 9th, there was a long in here that I took simply because we were looking for a bounce between central pivot and S1. We have a mid pivot in here, SM1. Okay, stops that were resting underneath this low here were triggered, give a nice hammer in here, and swing projection from this high to this low gives you this high in here. There was a short position right in this area here. Without putting anything on the chart, what do you suppose that this high is in here? If you've been posting the Fibonacci on your charts, as we've discussed in previous videos, you should be looking for high to low in this area in here is where we're going to be looking to go what? Short. Okay, now we did violate the 79% just a little bit here and here, but that's fine because our stop would be resting above here. Now the problem with this is we had to sit through all of this mud. Okay, now as price traded down into here, traded back up, and then started making a lower low, stop would be placed right above this high in here at a small number, 161.10. Okay, and it basically consolidated into new trading day, and then it finally broke down handsomely. This area right in here was SM1 central pivot for that day, and central pivot to SM1 in here, S1 here. This was my exit, so I missed this slide down into here. This day here I was expecting price to bounce at S1, reaching up for this move here, but I was wrong, and it went down, went up, and when price traded back down into here, I was running a fib. Let's get this fib out for a moment. All right, you'll see why I was trying to go long in here. Pulling the fib from low to this reaction high in here. Okay. Optimal entry was in here. My price was filled, but then quickly blew down below this low here. I initially thought that we had ran all the stops under this low on this candle here, and when we went back down on this one and it rallied up, I thought that we had made the session low for London that day, but price quickly told me how quick I was wrong in that regard. So I did take a loss here, and then when we made the lower low, okay, using the same reaction high here, I'm sorry, same reaction low rather, and to this reaction high here, okay, from low to high, okay, in this area here, okay, I was filled. Stop was below this low here. Now I'll be honest with you, I had my stop in here and I went to sleep. I wasn't concerned about it. If it stopped me out, I was going to be done anyway, but it didn't go down there. But I think if I would have been awake, that would have made me a little nervous. Now had you missed this one, you had an extra opportunity to go long again with a secondary optimal trade entry. from the low to this high right in here, because here's our 62% retracement, our 79% retracement, and it gave you the opportunity to go long in here. And quickly thereafter, price rocketed up to R1. Okay, so my profit objective on the trade was based on this low to this high. If you take the fib, take it up to the high, the short-term high in here, right there. Okay, so my swing projection was calling for this price level up in here, but before we get to it, it's going to be R1. Well, look at the previous day. We have another R1 here. So we have a lot of implied resistance. Plus, we have a high in here that anybody that wasn't short would have had possible resting stops above it. So my entry down in here had a limit order to exit at 161.10, which gave me the exit on this candle right in here. Now, had I been awake, okay, this is how I would have applied the swing projection. Okay, here's the low, 50% retracement on this level in here. Okay, once it started breaking higher here, this one projected through would have given us this high here. So you can see the tools did call for a pretty good likelihood of profit taking to come in here, which absolutely made the high for the London session that day, so which was kind of neat. But I did scale out at 161.10, so that wasn't a bad little trade there. The next trade was taken going into late afternoon, going into an area of time when I really don't trade that much, but I did have a limit order in here to sell at 161 on a limit. And the reason why I did that was we had let's draw a fib here. Okay, you can't really see it unless I move. Okay, you see keep your eye on this fib level right here, this purple one. It's going to line right up on that 161.10 when I drag it to the low. Okay, see how it blends and converges handsomely with that. Now, also, this low here to this high here. Watch what happens. The 50% retracement level overlaps with this fib here. Okay, so we do have a converging, overlapping fibs with basically it's a bearish situation, and we did trade down up to. This is not optimal trade entry. This is simply overlapping fibs, which is another concept I use for trading. Okay, so that's one other concept that I like to use for trading, is look for longer term swings and shorter term swings and see if there is an opportunity for them to overlap with the fib, and in this case it did. And if you did watch the Chris Lowry videos, that's a concept that I learned from him, simply just looking for overlapping fibs, and it's a pretty cool technique. But you're only going to be able to do that if you understand price swing. So again, looking at it naked, here's the swing higher, then we had a swing low. Okay, so measuring this low to this high, and then this high to this reaction low in here. Anything that overlapped also with this old resistance level And the resistance level also, again, was a round number, 161.10. So this was the trade only really had 11 pips. Yeah, 11 pips drawdown from the price I selected as an entry was 161 even figure. So again, stop was 30 pips above my price, which would be below. It would be below this high here by 7 pips, because this on this data feed was 37 was the high. So I was looking for a failure to get to that level again. Now it could have very easily went up there and stabbed up there and stopped me out. That would have been fine, but that was the trade. I did hold on to all this mess in here, and when price broke down going into Central European, and then we traded up to New Day's central pivot, blew out any stops that were resting above this high here, and then really tanked going into SM2, and that's where I took my profit. We did have ADR was at 159.90 for the day, and 159.80 was my limit to exit, and the low of the session came in at 159.62. So not bad. I gave up 18 pips for the day, but that was the swing, and that was the week in review. And I wish you good luck and good trading, guys. Okay, guys, we are looking at babypips.com thread I'm hosting currently. It is what every new and or aspiring forex trader still wants to know. Okay, real quick. Yes, the cable did go down to 160.14 area. We noted that on a 4-hour chart, and I'll bring that up later when I go over some of the examples and answer some of the questions that were presented by Hordane. And well, they're not predictions, they're just probabilities. So while it can look like voodoo to the new traders, but it's just technical analysis, and when the tools line up really well, that's what you get. Okay, I did suggest that I do sometimes trade against market flow, and it's not necessarily that I would advise a new trader to do. If you're just starting out, and if you're new to trading and you're adopting these concepts that I'm presenting, mainly just focus on trading in the direction of the 4-hour. And if you really want to make it simple for yourself and limit your trades to the cream of the crop, determine your long-term trend direction and momentum based on the commitment of traders and where the commercials have been trading their net position, if they're net long, if they're net short, and only trading in the 4-hour direction that is in agreement with the COT data. And for instance, I'll give you an example. If you're looking for a long, an ideal situation would be COT displaying commercials with a net long position. There doesn't have to be a premium between the futures contract of the next month and the nearby. There doesn't have to be any premium there for this to be a long. Obviously, if there is a premium and there is some backwardization, that just adds fuel to a more rapid price advancement or range expansion to the upside. Once market flow on the 4-hour is bullish, preferably the daily chart, if it can go to a bullish market flow, that really puts things in line for a no-brainer trade. Then you simply wait for, while we're under that environment and that trading condition, you want to see your trading sessions trading near the opens and closings of each session. Like, for instance, the London Open. For me, it's 3 a.m. Eastern Standard Time. It may be something different from you, wherever you are in the globe, but wherever your London session time frame is, that would be an ideal situation to look for a market to trade into during the opening of London in the buy zone, basically at the central pivot or below. And you would just basically look for a price to trade down to a support level, an overlapping fib with a 1 hour fractal high or low as a key support resistance level to key off of, and monitor your ICT smart money tool. If you're trading the cable, if you're trading the euro, overlap those two currency pairs, and on a line basis look for a failure swing. If one's making a lower low while the other one's not at a key support resistance level, with all those other long-term factors in place, you have a really outstanding trading condition for a long. And that's about the closest thing you can get to a no-brainer, sure thing deal in trading. Now, with those parameters, they can be reversed the same way. If you're looking for a short, obviously, just repeat everything I just gave you. To the contrary, everything should be set up on the negative side. Now, you're not going to get a whole lot of trades like that, guys. You may get, one or two of them like that, a month. But those are the trades that set up 500 pips, 600 pip swings, and sometimes, like we've seen recently, over 1,000 pip swings. And even if you're day trading, if you can trade your intraday swings and your scalps in that direction, it just makes trading so much easier and a lot more fun too, because you got everything going in your favor. So that's just one more addition to what you should be doing for your daily analysis and what you should be factoring for your bias. So let's look at some of these posts and answer some questions. Okay, real quick, LS1, they noted that they have been guilty of form-fitting their new acquired tools into their preconceived notions and trading plan, and that's very it's very mature of you already, if you are a new trader, for you to have this mindset. And I certainly appreciate you sharing that insight, and that's one huge milestone for you in your development. So you're on track to developing an outstanding professional mindset for trading. So kudos for you on that. Rio, that in conjunction with what I suggested on the Inner Circle Trader blog, I gave a screen snapshot and some details as what it should have given you. So all this is in agreement with that as well. So very good, and you're very welcome. Okay, Vonner, again, very good. It's in agreement with all the tools and dovetails nicely what was already given previously. Very good. Rashi Gomez. Well, I've never been called a legend, but I appreciate that. But I can see the trolls just drooling on that one. All right, Hordane. Okay, this is the 15-minute chart setup that he was looking at to go long, and this was a trade that I did take down in here. You should already see, even from here, once you start looking at your price swings on a chart, any time frame, guys, you don't want to be looking at a 1 minute and 5 minute chart, but you can use the 5 minute chart if you really want to zero in and get your risk really, really tight. And we'll be covering that in the scalping coarse and portion of my materials where you can really nail down like 10 pips and sometimes even tighter than that. And it's not a lot, but you can get risk under 10 pips sometimes. So all right, this low here, this high in here, and in here, that is what, guys? Optimal trade entry. And he's noting that this was a long and an exit in here, and in fact this area here was an area where I actually exited. So let's see. I'm gathering that he did take the long position and got out, so that's good if he did. And says he took 60 pips out, so that's outstanding. And if you could just do this, 60 pips per week. I know it just doesn't sound sexy. It doesn't sound GQ for us guys, and to new guys, they just want to be making hundreds of pips per day. And I'm probably guilty of it too when I post my trades, and sometimes I'm over a full handle or full figure in terms of pips as a haul for one day. And I didn't start off doing that, guys. It's not going to come easy for you. You're going to have to slowly get yourself to the point where you can consistently take a healthy number of pips per. And you've already noticed in the videos and previous posts that I suggested even 25 pips per week. You can build a fortune on that. You don't need hundreds and hundreds of pips every day. You certainly don't need them a week, but it helps, but you don't need it. So 60 pips, for one trade is absolutely, that's really good in terms of if you can consistently do that every week. Just 60 pips, guys. That right there, you can build an astronomical amount of money. I mean, it's mind blowing, really. If you could just sit down, pull a spreadsheet up, and just do that, risking no more than 2%, average of 1%, 1.5%, maximum per trade, just hauling in 60 pips per week. It's amazing how fast it can grow, even with $1,000 to start. It's amazing. But kudos to that. That was awesome, 60 pips. Okay, Hordane puts another trade in here. If I could, I would just like to make one suggestion. When you post a chart to the thread, and I appreciate you doing it, but try to get a little bit more in here. We all have the same charts and the same understanding of what market we're looking at, and noting on a wider scale picture, we'll be able to see what you're referring to. So just please use that as a suggestion. It doesn't really give us much in here to work with visually. You're illustrating a short, and okay, it looks like well, yeah, hindsight, if you cut the trade on, you're going to find that you're never going to be right in this business. You're going to wish you held it longer for more profit, or took it sooner before you gave some of it back. You're going to wish you could have bought it at a higher price or a lower price, sold it at a lower price or a higher price. You're never right. So that's why I try to teach in the first videos. Don't be so concerned about being right, and consistently profitable is all you're looking for. And if it's even 1 pip profitable, it's 1 pip profitable. It's not loss. Okay. Again, these charts that you're posting, and I'm not trying to criticize, but again, it's much more visual and friendly to the readers and myself, where we could see more of the chart. I know what you're looking at the chart, and you see what you're trying to share with everybody. But for new traders, I could tell, even with someone that's been trading as long as I have, this in here has very little to go on. So I'm not going to comment more than that, except for just in the future, or if you could go back into these posts and get like a wider view and give the prices on the right side of the chart, that'll help me explain or confirm whatever you're suggesting in these charts. Letting your trades run comes with experience, and the more you do the same consistently over and over again when you go into the market, if you have a routine or a trading plan that you consistently follow and you don't deviate from, that's when you start trusting your positions and your trades and letting them run for the longer term objectives. But never, never, never let a trade get 30 pips in your favor without taking something out. That's one of the most important things that I could suggest to a new trader. If you get 30 pips, and if you feel so inclined, if you get 20 pips, take a little bit off of it. There's no reason why you should let a price swing in your favor move 20 or 30 pips profitable, and then watch it come back and completely erase everything you've given for a profit, and then take away what you didn't have in the trade and start taking it as a net loss. As a new trader, when I first started trading, that was a hard lesson for me to learn, because I would have trades sometimes move 70 pips in my favor because of my stop loss on a longer term chart based on a daily low. I would be holding on to this trade and I'd watch it erode, and hopefully, and fingers crossed and eyes squinting, in the trenches praying to God, God help me get this trade profitable. Sometimes these things just went completely the other way around, and I've seen it go from 70 pips in my favor all the way down to 70 pips negative. So those were hard lessons to learn when I first started, because I wanted to adopt a lot of position type trading strategies to the forex, and they're not always they don't work as well as you might think in like a long-term trend. If you don't have the entry really accurate, even though your long-term analysis may be correct, you can have 120 to 150 pips move against you at any given time intraday, and still be right on your long-term direction. So my point is if you get 20 to 30 pips in your favor, always try to take something out, because you may be wrong. I know that's probably a shocker to most new guys, but I'm wrong too. I've had losing trades this past week, but still came out net positive. You're just going to have to learn to accept the fact that you're not going to be right all the time, and taking profits at 20 to 30 pips in your favor, there's certainly nothing wrong with that. In fact, most professionals find it a habit to do that, and my suggestion and advice is for you to adopt that mindset as well. So once you take a little bit off the trade, then you can always let your trades run for the longer term, and that's something you can utilize and work towards. Okay, this is a resistance area in here I keyed off of. I recognize this one because there's a little bit more data showing, and the prices in here. But I did go short on a trade that you'll see later on with this level, with these levels in mind. Okay. Yeah, again, we're in that same thing here. Try to get the prices in, even though we can discern what they may be based on your fib levels. Just for clarity's sake, it just makes it a lot easier to see. I recognize this because this is the actual trade that I went in initially. I'll use this one because and I'll refer to it on my own chart later on. But initially, when price made this low, rallied up and tried to trade back down in here, I used a optimal trade entry zone in here to go long, and obviously this candle here went down and crushed me and stopped me out. Then rallied back up, then made another low in here that did not go as low here. I ran fibs from this low to this high in here, and you'll note that the optimal trade entry came in on this candle here, and also the secondary, if you use this low to this high in here, and it gave you a secondary optimal trade entry that overlapped in the same price level here, and that was the long entry I used to go long here after taking the first stop loss that got tagged in here. All right, yes, exactly, monthly support, very good. Your analysis is really good. I mean, I really think that you got a firm grasp on a lot of the concepts. Okay, do you use buy and sell zones as a hard rule, or can it be cautiously ignored if you have several supporting factors to indicate a proper trade? Okay, that gets back to the buy and sell zones for the pivots. Okay, anything below the central pivot, generalized and generally speaking, would be considered the buy zone. Anything at the pivot, the central pivot and higher, is considered generally or generalized the sell zone. Okay, while that is true in the most generic sense, because they are implied support and resistance levels, okay, just like any other support and resistance level, once it's broken to the upside, a resistance now suddenly will become what? Support. We have that premise in mind, or that belief, as technical analysts, and it has to be able to translate and have that same belief for pivots. An example that would be, say we have been trading above the pivot level, the central pivot. We are considered in the sell zone. But if price has traded down to R1, okay, and we're in a strong trending market, and we get a bullish divergence on the ICT SMT smart money tool, the pound may be failing to make a lower low, while the euro does make a lower low, and we have an overlapping fib and a fractal high or fractal low as key support on an hourly chart. There's a lot of confluences just right there, and say those levels converge with a institutional level or even a figure. Simply because we're in the quote-unquote sell zone based on the pivots, okay, don't be lulled into believing that simply because the pivots are suggesting we're in the buy zone or sell zone, that's what you need to be doing. That's just one piece of the puzzle. And again, it's implied support and resistance. They are trumped by hard, real world hard support and resistance levels. For instance, daily highs and lows, session highs and lows. What was the high that was made in London? What was the low that was made in London? And what was, if you're trading London, what was the high and low of the Asian session prior to it? Those are real, tangible levels. They're not implied. They're real. They're there. They stopped the market for whatever reason. We don't need to know what the reasons were, but those are the main focus points for you as a trader using these concepts. The support and resistance that is clearly noted on your charts. Then you look for all your implied, and Fibonacci's implied as well, guys. There's nothing suggesting simply because we run a fib from high to low that it has to stop at the 62 or 79% retracement level. There's nothing suggesting that. It just means that there's a probability of it happening. So when we have a confluence of real support and resistance levels, okay, they will trump the bias, whether we're in a buy or sell zone basis to pivots. So I hope that answers your question. It just means that if we're looking for an overall bullish market, it's ideal for it to hopefully enter a trading session like i.e. London, Asia, or New York in one of those levels in agreement with the long-term momentum, whether it be bullish or bearish. Again, all we're doing is looking for a confluence of three of every possible thing, three of different types of support, three of different types of bias. For instance, if COT is in agreement with pivot and market flow, man, you got three of them right there. That's really, really strong. So that's what you're doing. You're trying to dovetail bias, support, resistance, okay, and then you look for your entry to your patterns to fall in line with that premise. It's really not that hard. The hardest part is waiting for those things to line up. because we all want to get in there and trade every session, every 20 pip move, and get on the blog, and maybe not this thread, but maybe 20 other threads. Hey, I'm trading. I made 20 pips here. I made 20 pips there. You know, it feels good posting it, but honestly, unless you have a real reason why you're doing it, and a method behind it all, you know, nobody really cares. I mean, nobody cares if I put my trades up here every single time I made a scalp. Nobody cares. They really don't. And it may feed your ego, but the patience factor is paramount, and you need to be able to have the patience to sit back and let these tools fall in line. Don't force them. And when you do that, trading absolutely becomes so rewarding, so it's fulfilling, really, because you have seen everything line up, and there's no rush to judgment. So I hope that answers your question. I don't use buy and sell zones as a hard rule now. In fact, I'll flip them from a buy zone. It may become a sell zone, and vice versa. All right, how do you determine a long and a short trend? Okay, if the daily 4-hour or 4-hour and 1-hour are showing short bias, do you look for long setups at all? I think I just answered that question. It depends on what is overlapping and what convergence do I see on the chart at that time. And there's so many possible variables that I could be here for another 30 minutes talking about them, and you still may not come away with being satisfied. But you basically want to have all the tools that we've been presented so far, and if you made a column of a buy and a sell, what all those factors would look like individually, for a buy, and what they would all look like for a sell. If you just made your own little cheat sheet and just made a check of everything for what would be considered a buy or a sell, whatever one has the most confluences or an agreement, chances are if you do that, you might be profitable. Just don't risk a whole lot on the trade, and use your swing projection as a means of getting out. And that alone, that could be a profitable system for anybody that's starting out too. Hello, goodbye. Thank you for your email. I know now that you're a guy. I love Scooby-Doo, but for whatever reason, it just gave me the impression that you're a girl. So, but awesome trade. That's good. That's awesome. And I do like the fact that you did say that you don't want to come on to the thread or read or comment about things while you're in a trade. That's one of the things I do also as a trader, because if I start talking about the trade, I could very easily find myself marrying the vein and talk myself into holding it or getting out before I should. So very, very good. Okay, Cuban Pip, thank you very much for your sharing your appreciation, and that's it. That's a wonderful compliment. I appreciate that. Again, thank you again also for Rashi Gomez. Again, that's far too kind, and it's my pleasure, guys. I really enjoy doing this, and when I see the little aha moments, or that moment of astonishment where you start to see these things start working for yourself, that's really why I'm doing this, because I remember what it was like for me, developing, and when it started to click, and it was so exciting. It was so, it was a rush. It really was a rush. And while I don't want to encourage or incite emotions in your trading, I do want to incite excitement for and the passion of learning how to do this consistently and hopefully profitable. So if I'm anything that encourages or empowers that as an end result, I'm certainly thankful and appreciative of anyone that is able to do that and share their story. That's what I'm looking for. I'm looking for that as an encouragement. That's payment for me doing this. I don't want any money. I just like the fact that I'm helping others, and I really appreciate those that come on and take the time to extend their appreciation. I like that a lot, and I appreciate it. Okay, Wally. All right. There's a lot going on that chart. Well, I'm going to take your word for it. It says that the basics have been working out for you, and that's awesome. This this little thing up in here where it gives the times. I think that's a really cool little indicator. I'm sure that's probably what it is. You probably plug that in when you put your chart up. But if you could make that available, and if you have already, I apologize. Just you can just sound off in the thread where others could locate that, because I think that'd be a really good tool for new folks, because I know one of the most confusing things in Forex is, what time is it? We look at our watch, where we're at, and while it may be, at the time of me recording this, it may be 5:25 p.m. New York Standard Time, but it could be something else somewhere else, obviously. But that would really be beneficial, I think, if you could make that available to those that are following the thread. If you don't mind, if you don't want to, that's fine too. But I think that's really neat. I noticed that when you posted this chart, so I thought that was kind of cool. Okay, well, that was a safe bet. So yes, I did trade the bounce off the pivot short. So with that, I wish you good luck and good trading.